In 175 years, we've learned that the economy changes, but the need to grow your investments never will. The time is now to grow your savings, wealth and investments. Visit your nearest branch or uapoldmutual.com.
Jerusalem, ikayalami, ilonolose, uhamenami, sungangishililana. Jerusalem, ikayalami, ilonolose, uhamenami, sungangishililana. Yawu yami halikolana buso wami haukolana ilonoloze zu amenami. Yawu yami halikolana buso wami haukolana ilonoloze zu amenami.
$1.1 billion people currently.
Hello, can you hear me? The name's over.
Recent years, with African private equity returns exceeding the emerging market benchmark.
Turning this on-paper theoretical potential of markets and people into an African reality of growth and jobs demands at its heart a closer, more collaborative partnership between business and government.
The region is forecast to experience a real GDP growth rate of 4.2% over the next 5 years, well above that of Europe and North America. During the next 8 years, consumer and business spending in Africa is expected to rise by $1.6 trillion. 70% of African countries have strengthened their governance structures and systems over the last decade. And this, together with a growing suite of risk management products, is reducing the risk profile for Africa-focused investments. private equity interest in Africa has grown rapidly over the last 25 years. Over $30 billion is managed across 200 Africa-focused funds today, with Old Mutual Alternative Investments managing around 14% of that.
Africa is 54 different countries, and in each country there's jurisdictional risk, there's political risk, there's the risk around the framework within which you're investing, the regulatory framework, the legal framework. There are currency risks in Africa, so it's critical that you are investing with partners in these different countries who are reliable and trustworthy, who know and understand the environment and are able to manage effectively within the environment that you're investing in.
Dubai and Singapore have demonstrated that accelerated economic growth follows a period of infrastructure investment. The priority now must be to prepare for Africa's population growth by focusing on infrastructure in urban areas, improving water and energy reliability, creating jobs, and promoting regional trade. Managed effectively, with the public and private sector working in tandem, this demographic shift can lead to positive, sustainable economic development. As with all great opportunities, timing is everything. And there's no question that the time to act in Africa is now.
Have you ever thought about the word mutual? Mutual respect, mutual admiration, mutual interests, mutual benefits. It's a little word with big meaning because it describes a state of commonality, of shared experiences or beliefs, and of close relationships. For us at Old Mutual, the word mutual is much more than just a part of our name. It's a promise we make to those we serve. Through our core business activities of gathering capital, investing it on behalf of our customers, and transferring risk, we are working to create a more socially inclusive, resource-efficient, and low-carbon future for all our stakeholders. And it's this that makes us the first choice financial partner for millions of Africans. We understand what is important to people and businesses on the continent and what challenges they face. And they trust us to help them overcome those challenges, protect what is important, and transform their dreams into reality, while constantly evolving how we deliver on our purpose and keep our promises. The reason why we do it is the same today as it was almost 2 centuries ago: to become our customers' first choice to sustain, grow, and protect their prosperity by offering a range of integrated financial services that truly meet the needs of our customers throughout their lifetime, enabling entrepreneurship, embracing diversity and inclusion, supporting financial well-being, and delivering quality education and skills development, so that together we can do great things every day.
At Old Mutual, we have weathered many storms over the past 175 years, and our financial position remains strong and resilient enough to withstand the toughest of times. Over the last few months, our response to the pandemic has been focused on partnering with our key stakeholders on initiatives to drive a positive and significant impact during these challenging times. We are privileged and honored to be able to continue supporting those who have always supported us.
Can you hear me at all? Okay. So how do we know when we are live or not? Brother, you see why me I prefer the virtual AGMs. They're cheaper, man. You don't write. Yeah, over. Man. So you can imagine that's like renting a stadium. Thank God for COVID.
Hello, can you hear me? A very good morning to you, ladies and gentlemen. We have not yet started the meeting because we are waiting for the Secretariat to confirm that we have the permissible quorum. So please bear with us. We shall be starting shortly. Otherwise, for all of you who are here, you're most welcome. And for those who are on the call listening in, you're also welcome. And we will start as soon as I get a prompt from the Secretariat. Thank you. Hello, may I call this meeting to order? Once again, good morning to you, ladies and gentlemen. I have been informed by the Secretariat that we have a quorum and we are going to start this meeting. My apologies for starting late. We're supposed to have started at 10, but we will try and finish this meeting by 12 p.m. So we're going to open this meeting with a prayer, and I'm going to invite one of our longest-serving unit holders, David Baraka, to give us a prayer. David?
Thank you, Chairman. Good morning, friends. As we gather here this morning, we pray to the good Lord that He guides this meeting, that whatever will be discussed, deliberated, and decided will propel this company to such great heights that it becomes the choice of investment. In His name I've prayed.
Amen. Thank you, David. I must disclose that David is well known to me, but I'm not the one who chose him to give the prayer, so nothing has been rigged. Thank you for the prayer. May I ask the Secretariat to confirm the agenda? Brian?
Thank you, Mr. Chairman. I confirm the agenda for the annual general meeting.
Thank you. I would also like to invite you to read the notice convening the meeting and confirm the quorum for members present in this venue and online.
Thank you, Mr. Chairman. Good morning, ladies and gentlemen. I am Brian Kisita, a senior associate at Kasile Biauhag and Company Advocates. Kasile Biauhag and Company Advocates are the company secretary, stroke lawyers for UAP, Old Mutual Financial Services Limited. And in this capacity, we shall be the secretaries for this meeting as well. I would like to read the notice of the meeting for this annual general meeting. The notice for the annual general meeting is as follows. Number 1 on the agenda item is opening prayer, which has been done by Mr. David Baraka. Agenda item number 2 is confirmation of the agenda. Agenda item number 3, to read the notice convening the meeting and confirming quorum. Agenda item number 4, review and adoption of minutes from the previous annual general meeting. Agenda item number 5, chairman's speech to unit holders. Item number 6 is presentation from the trustee and custodian. Number 7 is speech from the regulator. Number 8 is presentation of the finance manager's report. Number 9 is to receive the audited financial statements for the year 2022 and the auditor's opinion. Number 10 is a question and answer session. Number 11, to transact any other business on the financials for this meeting. And lastly, agenda item number 12 is vote of thanks from the chairman and closure of the meeting. Ladies and gentlemen, based on the information we have gathered and on behalf of the Secretariat and the board and the members up here, we confirm the quorum for the meeting. We have about 500 people online and some members physically present with us here. And I welcome you all to this annual general meeting. Thank you, ladies and gentlemen.
Thank you, Brian. Yes, and I think this is an opportune time to introduce the people who manage the unit trusts who are seated with me here. You have heard from Brian Kisita, who is on my extreme left, from Kasile and Biarohanga, the company secretaries for the unit trusts. On my immediate left is Simon Mwebaze, who is the Managing Director of UAP Old Mutual Financial Services. I think it is also opportune for me to now inform you that the name has changed from UAP Old Mutual Financial Services to Old Mutual Investment Group, Uganda. I am the chairman. My name is Samuel Sejaka. On my immediate left is John Goloba, who is the CFO of Old Mutual Investment Group, or UAP Old Mutual Financial Services. Next to him is Jovita Babire, our auditors from KPMG. And last but not least, seated here with me is Rosalind Ochola, who representing Standard Chartered Bank, who are the custodians of the fund. Our regulator is represented by Edgar Mutebi. Edgar is not here. I don't know, is he in the room? Oh, Olive, you're most welcome. I hope you'll be giving the remarks from the regulator. You're most welcome. So those are the people in the room, but who are responsible for managing the affairs of the unit trusts. But also in the room, we have invited some of the unit holders who have been with us for more than 10 years. And you're most welcome. Online, we have more than 540 subscribers who have also joined in. So I will now invite you, the members, to take note of agenda item number 4, which is the review and adoption of the minutes of the previous meeting. Ladies and gentlemen, the minutes were circulated 21 days ago, and it is my sincere belief that you have all read and understood the minutes. So I'm going to invite one of the unit holders here in the room to propose the adoption of those minutes, and another one to second. Without picking out anybody, can anyone propose adoption of the minutes?
Thank you, Chairman. My name is Yusuf Katshabe. I propose the adoption of the minutes.
Thank you. A seconder?
Good morning, everyone. My name is Nambe Jeruth. I second the adoption.
Okay, thank you very much, Ruth. Next item on the agenda is the chairman's speech. Normally, we would have dealt with matters arising, but if there are matters arising, we shall deal with them in the question and answer session in the interest of time. So once again, I would like to welcome all of you to this annual general meeting of the unit holders of the UAP Old Mutual Financial Services Unit Trust, soon to be called Old Mutual Investment Group Uganda Unit Trusts, following the merger of UAP and Old Mutual. The written speech is very, very long, and I will try and summarize it as much as possible. I also know that you have received a copy of this speech, so I will not read everything, but I'll read the highlights. I will start with an economic review. Having opened on a recovery pathway in 2022, the year turned out to have several macro deviations, which were amplified by multi-directional swings at a global level, triggering the onset flow to the domestic economy, creating an uncertain operating environment. Uganda's growth rate for the fiscal year 2022 was recorded at 4.6%. This is a significant rise from 3.5% for the preceding period of 2021, notwithstanding the emerging external risks driven by the Russia-Ukraine crisis, which continues. The crisis also led to global supply chain disruptions, elevated commodity prices, and tighter financial conditions. All of these were exacerbated by extended COVID-19 lockdowns in China, which went on for more than a year, and also then disrupted the supply chains, and the war that I've referred to led to lower trading partners growth, a negative shift in terms of trade, and adverse weather patterns in the countryside, diminishing the food basket. Of concern also to us is the continuing crisis of climate change that we continue to experience, and the El Nino. Interest rates. 2022 witnessed a mid-year deterioration in the balance of risks, with inflation peaking at heightened historical levels, with amplified base effects on both food and energy indices, coupled with reduced consumer and business sentiment or capacity to consume, and an increased volatility in the exchange rate. On the side of equities, the Uganda Stock Exchange All-Share Index and LCI dropped 11.45% and 13.04% respectively, closing at 1,202 and 272 respectively, with total turnover increasing from 33.2 billion in financial year 2021 to 39.41 billion for financial year 2022. The continued drop in these indices is driven by muted foreign investor appetite, augmented by marginal retail performance, with key highlights being the Umeme counter, 37.5% appreciation, post the concession termination. I must admit this is not my language. If I was the one who had written this, I would have said that the value of the equities on the stock exchange continued to fall, with a few exceptions like Umeme, which registered a 37.5% increase. Does that make sense? Okay. I would also have added that despite the fall in the all-share index, the equities on the stock exchange remain fundamentally sound, and we have held our positions as much as possible. And as you can see, the dividend from Umeme came in at about, was it 48%? And that boosted the unit trusts. Coming to 2022, we registered a 79% growth in fund size, closing the year at 1.098 trillion in assets under management. This was up from 615 billion in 2021. The largest inflows registered were in the flagship umbrella trust fund, which recorded an 80% growth. Ladies and gentlemen, if you turn to page 8 of this of the prepared speech, you will see the actual amounts, and you will see therein for 2022 that the UAP money market fund fell in value from 7.7 billion to 5.18 billion. The UAP umbrella trust fund increased from 604 billion to 1.089 trillion, an 80% increase. The UAP balance fund remained more or less stable, increasing slightly from 3.3 billion to 3.6 billion. So assets under management, which are referring to, were a total of 1.098 trillion shillings assets under management. On the same page, you can see the performance. The UAP money market Fund returned 11.07%. The UAP Umbrella Trust Fund returned 11.63%, and the UAP Balance Fund had a return of 11.63%. Again, I would want to say to you that our performance beat the inflation numbers that I have referred to. Going forward in 2023, we note the external shocks in 2022 that have created major macro pressures on frontier and emerging markets throughout the year. And we think that this will continue, also exacerbated by the climate effects. The issues of climate change have been very real, and I'm sure you have heard on the news about record temperatures being recorded in the northern hemisphere. We are also in a season of El Nino, and the rains here have been slow in starting, but we are concerned that they may have a very significant impact on food production, and that is a very big predictor of economic performance in our agro-based economies. So we are concerned by those items, and we are watching them. Headline inflation is expected to remain high above the pre-pandemic levels, ranging from 8 to 9%, and averaging between 6 to 7% as per Bank of Uganda medium target of 5%. Again, what this means is that Bank of Uganda practices inflation targeting and would like inflation to remain at 5%. We expect that it will be slightly higher at about between 6 to 7%. I have already talked about local stocks. These local stocks are expected to remain depressed in the short term on account of higher yields from assets such as government bonds, except for the Umeme counter. You know that the Umeme price has been driven by the proposal of government to end the concession in 2025. Again, we continue giving advice to our investors that this is not something that should worry, because there would be an agreed closing price for those shares if government were to pay out the Umeme concession in case it is not renewed. But again, as I have said, the fundamentals for most of these companies in which we hold some of the equities remain solid, and we expect that they will have a good performance, especially in terms of financial performance. So in the equities market, we shall be looking to exploit buying opportunities caused by the global risk on-off sentiments, especially on the Nairobi Stock Exchange, where blue chip companies have had significant drops, as well as explore the opportunity in the upcoming Airtel IPO listing. So this Airtel IPO listing is expected for the last quarter of this year, and we look forward to participating in it. So with those very, very many remarks, plus the other ones that are written in here, I'd like to declare the annual general meeting open, and invite a presentation from the trustee and the custodian, Rosalind Ochola. I thank you so much for listening to me. By the way, I forgot to tell you that I'm dressed exactly the same way I was dressed last year. I also just noticed it.
Thank you,
Rosalind, over to you.
Yes. Thank you, Chairman.
Yeah.
Yes. Good morning, unit holders. We come to you this morning. We are Standard Chartered Bank Uganda Limited to confirm in our capacity as the trustee of UAP Old Mutual Unit Trust Funds that, as required in terms of Section 121, subsection 1, subsection 2 of the Collective Investment Schemes Unit Trust Regulations of 2003, we have satisfied ourselves that every statement of financial position prepared by the manager of the scheme fairly represents the assets and liabilities, as well as the income and distribution of income of every portfolio of the scheme administered by the manager. To the best of our knowledge, UAP Old Mutual Financial Services Limited, the manager of the schemes, has managed the scheme in accordance with the limitations imposed on the investment manager, the investment and borrowing powers, and the trustee by the Collective Investment Scheme Act of Uganda of 2003, the prospectus and the trusted of the respective schemes. Thank you, unit holders. That's the presentation from the trustee.
Okay, thank you very much. What they did not hear from you is that the funds are safe in your custody. But I can confirm that that is the situation. We need to recognize agenda item number 7, the presence of the regulator represented by Olive Amonojom. We have been advised that the regulator is here in an observer capacity and will not be making any comments. I'll now invite the finance manager, our CFO, to make the report. John Goloba, please present your report.
Thank you, Chair. Just to confirm, I hope I'm very audible. Thank you, Chair. I'm going to briefly take you through the performance of 2022 and the journey of our unit trust business. So, looking at, I'll start with our biggest fund as UAP Old Mutual Unit Trust Funds. And that's our umbrella trust. So looking at the journey of our umbrella fund, here the coverage, we try to focus on how we move the journey from 2018. So when you look at, in terms of overall performance, that's our P&L, or our income statement. Literally, there's been really significant growth with, of course, in terms of profitability, we started looking at a 5-year span. In 2018, we had a profitability of just 21 billion for the umbrella trust. But as we speak right now, in 2022, we are at 231. So there has been quite the journey. And of course, the biggest peaks and biggest performance areas came through in 2021, where we picked up 125 billion as profit for the year for the umbrella trust. But with that momentum, of course, coming through in 2021, we managed to keep up the same momentum and jump onto 2022, and that's how we picked up that good performance of 231. Okay, in the profitability now, the biggest drivers as our umbrella trust fund, we continue to strive or to focus on mainly 3 income streams. One is, of course, from our government securities. Government securities, I'm speaking about the bonds and the bills, and at the same time, any other options that our government actually has for us to invest in. And then looking at the banking sector, we also focused on the fixed deposits. And around the fixed deposit area, also we managed to actually pick up significant growth, specifically with most of our local banks. So as we collect most of your funds, we try to grow the local market, and that's keeping the funds in Uganda. So you will notice that we try to support and reinvest and make partnerships with most of the preferred banks in the country, and that's how we picked up the interest from the fixed deposits and, of course, some calls. So in general, also looking at the umbrella trust as a whole, so with, of course, investing in government securities, a lot of it, the biggest percentage, and some element, of course, with our local banks here in Uganda, we managed to close the year, like the chair highlighted, with total funds being managed specifically for the umbrella trust of 1 trillion. So when you compare the 1 trillion movement from where we were last year we're at about 600. And then also speaking into the journey, we try to show you the journey, how we have been able to move in the last 5 years. Because when you look at 2018, we were at 88 billion. So a movement to 1 trillion in just 5 years. That means that actually the market is embracing the product, and there is potential even for bigger growth. And of course, we do we do look forward to even bigger growth and creating bigger impact for most of our unit holders. So specifically on the financials, like I've highlighted, those were basically the highlights looking at an overall picture. But we believe that these trends being that are happening in the market with, of course, such growth, which is almost 100% from where we were last year, that the same is actually expected to happen in 2023. But of course, we are looking at kind of growing and splitting the mix so that we kind of have even an improved and better return for you come 2023. So also maybe to highlight on the area around our expenses. So how we do the expenses on the fund in general as a whole is that the expenses are attached to the size of the fund. So if you see the fund ideally growing, and by the way, when I say expenses, I'm looking at there's an element of a 2%, and of course, and where this money goes, some of the things is of course to prepare the AGM like we are hosting it today. Another is of course to support our other service providers and partners like the auditors, we have the IT systems that you're using, and then we also have of course the custodian and the trustees. So all these people are our partners as we manage your funds, and that's where the expenses are actually going. And another area, of course, where we normally invest, spend most of the money that we do actually get as a portion. It's about 2% thereabout of the overall fund. We look at that money, we normally consider it in the opportunities that we do have them in the market and of course outside the market. So once that we do have the expenses of course well tracked and then catered for, then the fund actually even has a possibility of even bigger returns in the years to come. So that's a brief update around Umbrella Trust Fund and the significant changes that we had specifically when you look at where we were in 2021 vis-a-vis how we closed 2022. So I'll quickly move on to the next fund, which is our money market. Now, looking at our money market, actually the money market, just like the umbrella, the span or the diversification in terms of assets that we do invest isn't as different. So here also the underlying assets that we do invest in is around the government securities, and that's of course the bonds and the bills, and then of course around our financial institutions, mainly around the FDs, fixed deposits, and of course call deposits. And also as a whole, how the money market fund actually looks at all the underlying factor around the money market fund. It's our shortest term fund. So here most of the investors are people who invest with us and kind of use their money as working capital. So they can actually withdraw as much as on a weekly basis. So that's why you notice even when you compare on the overall return, our money market has the lowest return because it has a lot of activity. But we noticed that the market actually embraced the umbrella fund even better because first of all, the returns are higher, and we noticed for most of our investors that they prefer to keep the money slightly longer for them to get the best rewards. And we believe this should be the norm for most of the people on the call, that the longer you keep the money, the higher the return. So we would really urge most of you guys to keep the money as long as you can, because that's when the return is even bigger. And also on the end of the fund manager, it's easier for us to tap into even better assets out there to better grow your return, at the same time keep it as safe as possible. So also looking at it in general in growth, even on the in the general assets, of course, even the money market fund did register some growth in overall. Looking at the assets, of course, at about 33%. So even though this very flexible actually fund had a return that was slightly lower than the umbrella, but we noticed that so many clients actually were understanding and taking advantage of these returns. But in general, even the performance of the money markets actually beat the inflation in the country. So that means that money that you as a client kept in your pocket or somewhere else actually lost value compared to when it would have gained value had it been in any of our funds. Just like the umbrella fund, money market, even the expenses, they move literally in the same direction and line. So that hasn't changed as much. So I'm going to move on to our balanced fund and focus a little bit there, because this slightly has a change in terms of assets that are being invested. I hope you can see the presentation of the balanced fund. So on the balanced fund, just like the name, it's a balanced fund. So when you compare it to money market and umbrella, literally the difference is in the investor sentiments and then the assets where we're putting most of this money. So you will notice that here the strategy is a very long-term strategy for most of our investors, and we try to diversify in the risks catered for in this fund. So it's literally at the moment the only fund where we have stocks, or should I say equities. And of course, what we look at as a whole in general is to ensure that our long-term needs of certain investors are catered for, because in the past we noticed that people would come with long-term goals but then get held up with, let's say, the short-term aspects of the investments that we are holding. But this fund literally caters for that. And the exposure here, we had, of course, exposure mostly on the Uganda Stock Exchange and a little bit of the Nairobi Stock Exchange. So even in the equities, we have tried to keep our investments within East Africa, and that's literally Uganda Stock Exchange and Nairobi Stock Exchange. But of course, even the balanced fund in general, our biggest emphasis continues to be around the government securities. So probably you're wondering why we have a lot in the government securities. One of the things is that when you look at the tax exposures, I will use, for example, our 20-year bonds. The taxation is around 10%. So if the same is invested in, let's say, financial institution, the taxation is way higher. It can range between 15 to 20. So looking at that exposure, that's why we run with, of course, a lot of the government securities. And then, of course, there is also an element of certainty, where we are more than certain as fund managers that actually, when the maturities do come through, the government will honor its promise. And that's why we have the regulator, ideally, who's Capital Markets Authority, and that's the arm of the government as well. So that ensures that your funds are actually safe in that region. And then also the exposure, why we keep it on Nairobi and Uganda Stock Exchange. First is, of course, to support our local markets. As a unit trust fund, we also want to create impact, not only just for the individual clients that we do have on board, but also for the communities and the environments where we come from. And to do that better is, of course, to support mostly our local opportunities that are available for us in the market. And that's why we try to emphasize a lot of investments in the country, because we believe if we have growth in our GDP as a whole, then, of course, there is growth and bigger opportunities for many of the unit holders. And that means also in the long term, it grows how much money we are able to deal with and create value in the country. So in summary, that's how literally we did perform. And maybe the equities that did perform well, I think Chair really highlighted those. But of course, the outlier was Umeme, where we actually picked up significant numbers. And we believe that's how we picked up that good growth for 2022. So at the moment, I think I'll pause here and ask the Chair to carry on. Thank you.
Thank you, John. To summarize what John said, is that he made money, him and his colleagues made money for you. Under the Umbrella Trust Fund, they had a profit of 93 billion. Under the Money Market Fund, they made a profit of 689 million. And the Balance Fund, 389 million. Turning back to the agenda, I would now like to invite Jovita to present the auditor's opinion on the Unit Trust's financial statements. Jovita, as I said, Jovita Babiria is from KPMG, and they are the external auditors of the Unit Trust Fund.
Please confirm that you can hear me. Okay, thank you very much, Chairman. My name is Jovita Babiria, as mentioned, and I'm an Associate Director with KPMG. I'm here to represent Stephen. Can you hear me? Okay. Represent Stephen, the engagement partner who hello? Please confirm that, okay, thank you very much. Like I said, my name is Jovita Bavidie, the Associate Director in KPMG. I'm here to represent the engagement partner who sent in his apologies. And we confirm that we've audited the financial statements that have been presented by management of the unit trust funds, and these include the balanced fund, the money market fund, and the umbrella trust fund. We audited the funds separately and issued separate opinions for each of the funds. And the audit opinion that I'm going to read basically covers each of the funds, but I'll just read one since we had a similar opinion across all the funds. Our audit opinion is on the first two paragraph of our auditor's report, and I'll read it verbatim. We have audited the financial statements of the unit of the UAP UAP Old Mutual Unit Trust Fund, set out on pages 8 to 33. Those are the pages within the financial statement, which comprise the statement of financial position as at 31st December 2022, the statement of comprehensive income, the statement of changes in net assets attributable to unit shareholders, the statement of cash flows for the year then ended, and the notes to the financial statements, including a summary of the significant accounting policies. Our opinion is on the second paragraph. In our opinion, the accompanying financial statements give a true and fair view of the in our opinion, the company financial statements give a true and fair view of the financial position of the unit UAP Old Mutual Unit Trust Funds as at 31st December 2022, and of its financial performance and its cash flows for the year then ended in accordance with the International Financial Reporting Standards as issued by the International Accounting Standards Board, and in a manner required by the Capital Markets Authority Act, and the Collective Investment Schemes financial and accounting regulations, laws of Uganda. Our auditor's report also includes key audit matters. We're required to report on key audit matters, and these are matters that in our professional judgment were most important in the audit of our financial statements. And based on our audit, we determined that we did not have any key audit matters to report in our auditor's report. Within the auditor's report, there are responsibilities of the directors on the next page, and then we have responsibilities of the auditors as well, detailed on the next page and the third page. And then we're also required to report on other legal and regulatory requirements. We confirm that we did not have any exceptions in those communications, and those are all detailed in our auditor's report. The auditor's report was signed by CPS Stephen Inegate, who was the engagement partner on the assignment, and the opinion was issued on 30th March 2023. Thank you very much.
Thank you very much, Jovita. We have now come to agenda item number 10, and it is at this point that would really invite your participation to ask questions, seek clarifications, interrogate our plans, and also learn about other opportunities that are in the market. So I'm going to invite Zach, one of our members of staff, to manage this question and answer session. Over to you, Zach.
Yes.
And if the questions are very tough, I will send them back to you, because you are a chartered financial analyst and should be able to answer them. Over to you.
Well, thank you so much. Thank you so much, Mr. Chairman. Your shoes are too big for me to fill. I'll see how long I'll last trying to fit in them. Yes, but you're all welcome. As Mr. Chairman has introduced me, I'm Zach Kisesi, and I also work with the OMIG Uganda team. Yes, there are a number of questions which have been posted through the online platforms. I'm happy we're seeing some in the chat room, and then there was also a question link that was sent earlier on. There are some questions which have just come up. One of them is, I think this is a gentleman who's called Mr. Eric, who's wondering why sometimes redemptions do not take, why, in his words, it takes more than a day to redeem funds sometimes. What could be happening? So I'm just reading basing from the chat, then we shall see how to distribute. Then there's also a question about taxation. Someone's wondering what the impact on the portfolio return is as far as taxation is concerned. As you know, tax issue was quite big in the previous year, and I'm sure our managing director, Mr. Simon, will have something to say about that. And then someone is also asking about the current political, and this the person who asked about taxation was Patricia, but then there's also a lady called Shan Mateka who's asking about with the current political environment and potential default on sovereign securities, are the investments in bonds and treasury securities safe? I think we're always telling people investments are safe, bonds are safe. So Mr. MD, kindly throw more light on that. Maybe we shall take about 2 more, and then we shall see how to answer those before another set. There's also a question being asked about are there plans of eventually going paperless as far as registration is concerned, making redemptions? I think there's someone who's interested in knowing what our plans are as far as redemptions, going paperless and things like that. And then also there's just one more question, which shall be for, I think, the CFO. Someone observed that there was an 84% increase in operating expenses from 13 billion to 24 billion. So what comprises of these expenses? So I think those are the questions. I think we shall start with our managing director, talking about the taxation, and the by Patricia and Shan, talking about the current political environment. And then I think I will talk after our CFO has talked about the increase in operating expenses. Someone wants to know more about that. Kindly keep the questions coming. We shall answer as many as we can. Thank you.
Good morning, and it's such a pleasure and a privilege for us to be hosting the 7th Annual General Meeting. My name is Simon Mwebaze. I'm the Managing Director of Old Mutual Investment Group, formerly known as UAP Old Mutual Financial Services, but like our chairman has rightly put it, we've recently gone through a rebrand, and we're still transitioning through that rebrand. So when you start hearing a lot of Old Mutual Investment Group, then you'll know where we're coming from. Thanks to the unit holders who have raised some of the questions, and I'll quickly try to jump through the ones that Zach has apportioned me, and the first being the question around the taxation of the unit trust. So as probably most of our unit holders are aware, and generally the viewers and the people in this room are aware, sometime early this year, I think probably must have been like in March or in early April, we did get communication of some proposed amendments to the Income Tax Act, and in particular around the taxation. At that point, there was a proposal to tax unit trusts based on how much someone has invested. And the proposal was if someone has an investment amount that is below 100 million,
they would be in a 5% tax category for all their benefit, all their gains that they would have made on their investment. And for an individual who has invested above, or an institution that has invested above 100 million Uganda shillings, they were then supposed to pay a tax of about 15% on their gains. However, there was a bit of back and forth, both from the policy decision makers and also some engagements that were done within the regulator, from the regulatory perspective, the industry perspective. And there was general consensus that probably right now wasn't the best time to consider such a tax. And indeed, through Parliament, the proposal was dropped. And we're extremely grateful to all the different stakeholders that have been involved in this process. And we remain optimistic that we should be able to have a conducive taxation environment. But also, as industry players, we need to be able to demonstrate our worth in terms of why the tax policy is it just to aggregate savings, or can there be more that can be done to demonstrate that it's not just an incentive, but it's actually something that we are going to harness, leverage of it to participate, let's say, in the development and in the development of the economy and generally improving the well-being of society. So it's also a challenge on us as industry practitioners to match our weight. And I think that is how we are looking at it, and that's how we want to take it. There was a question around the current political environment and the potential of default on sovereign securities. My board chair already says that we use a bit of technical lingo, but I think what Shan is trying to elaborate in this question is there's been, as a result of the COVID pandemic, and again as a result of the Ukrainian war, and generally a number of global themes that have played out, we've seen that a number of countries are beginning to experience some form of strain on their financials or on their ability to pay the debt that they've borrowed from different players. Case in point is our neighbor across the road, Kenya, who is having about, I think, $1 billion or more than that US dollars that is maturing sometime next year. And this is a Eurobond, and investors and the general sentiment is, given the tumultuous nature that Kenya is going through right now, there's a risk that maybe they might default and maybe have some strain. But in terms of our view and the way we look at things, it's sometimes that noise that we really get attracted to. And that noise sometimes creates pockets of value or opportunities that we are able to read between the lines and see what is the real story going on. And for example, in Kenya, when we look at that sovereign story, yes, there's that risk. But in the grand scheme of things, when we look at how the different blocks that support that economy and how those blocks are faring, we actually have more confidence in the fact that, one, they'll be able to come out of that, turmoil. And from our view, or how we are looking at things, we are looking at a lot of opportunity. And that's why in the chairman's remarks, he has been saying that there is chaos there, but there's also a lot of opportunity. We also think that a number of African governments in particular, the ones that are going through this sovereign risk, we think that there's right now is the time to do a lot of self-reflection on how are we as governments utilizing the funds that we borrow, because the day for paying back eventually comes and you have to be able to pay. Otherwise, you start getting into all these strains of default. So we think that going forward, we're likely to see more and more rigorous or prudent approach to borrowing, government borrowing. And even beyond the prudency, we're likely to see more and more stringent ways of, or stringent focus to ensure that once funds are borrowed, one, they are these resources are efficiently allocated, and eventually also we are likely to see scenarios where economies are coming out of that strain. But from where we are seeing it, we are seeing a lot of opportunity, and we're trying to sift through the noise. How can we create value? And you'll be able to see this value over the next couple of years, and hopefully you'll be able to see some of that value next year. There was also a question, I don't know if I had handled all the questions, but there was a question around, I think the rest were for John. Thanks.
Yes. People want to know about that very big 84% increase in expenses. What does that mean?
All right. Hope I'm audible. Thanks a lot, MC. Now, looking at the expenses, maybe to give you a highlight of what we consider as the expenses. So, first of all, our as the fund managers, when we get the funds, of course, in the changing times with COVID coming in the picture, a lot of concentration and focus change from the old way of doing things. And so I'm going to focus mostly on 3 points. One, the digital journey, and of course the safety of your funds. So, and maybe the third one, of course, the resources and the manpower that's behind managing your funds. So one of the areas, of course, the digital journey. With the COVID coming in the picture, we noticed that these things of doing things the old way of manual processes and paper, a lot of paper, that wasn't the best way of doing things. And of course, we learned the hard way through COVID. So we did have to invest a lot of expenditure in growing our digital footprint. And of course here, it's around the innovative ways of how we can deliver our services best to you or clients remotely across the world, because we have so many clients actually in the diaspora. So if our way of doing things involve the client coming physically, then we wouldn't add value to that person, and that actually prevents growth in our market as a whole. So one of our biggest expenditure areas is the digital journey and the systems that we do use. I think some of you have interacted with our system. So what happens is that once you come on board, we want you to have one of the best experiences with, of course, right now having a journey of an end-to-end user experience where there's almost no human interaction when it comes to onboarding, you receiving your funds. But of course, for us to be able to get to that journey and serve everyone across the world, as our overall strategy is to ensure that our services can be actually received from anywhere, mostly diaspora, a comfort of your home. And then we notice that so many of our investors actually have other jobs they're doing. So we want to be able to serve you at the same time when you do your day-to-day activities. So we are investing heavily in the systems and that kind of approach. And of course, the other bit is the marketing. So like I said, Uganda as a whole or as an economy, when it comes to investments such as unit trusts, we are in the growth stage. And of course, we believe at the moment we are trying to hold a flag for the rest of the team players to ensure that everyone comes with us on this good journey of growing a lot of value for many of our clients, and to ensure that we are able to reach all people in different areas. So right now we try to market as much as possible using, of course, our traditional marketing ways of, let's say, the radio stations, the media houses, the newspapers. But at the same time, we believe these days one of the ways to better distribute to distribute your products or to reach everyone is through the social media. And then also use of smartphones and all the gadgets that are clearly very present in many of people's lives. So we have also invested heavily to ensure that the same way all the people who are in the fund actually came on board, we are able to also reach, let's say, those people in the villages, those relatives of yours that have gone probably to Dubai or Saudi Arabia, And we can only do that through, of course, giving them the accessibility, because if we keep it internally, then that will limit the growth of course, your value addition, the economy as a whole, and other opportunities that we have available. And another area that we are investing in heavily is, of course, on the research on where to best put your money. So, of course, back at the fund management level, we have invested in a lot of resources, experiences, covering, of course, around Africa. And maybe to better put that is, we are lucky that we are part of even now a bigger group, which is Old Mutual. So our coverage is not just in Uganda or East Africa, but of course to benefit mostly around such a global or multinational footprint, then you have to invest in those areas. And of course, the value addition, even with the limitations of the investments that we have available in the market, we believe when we put a lot of emphasis and some good expenditure in those areas, we shall grow even the different assets that we are investing in. Because at the moment, a lot of focus is around the institutional sector, and of course, equities and the government. But we believe if we are able to tap into the likes of alternative investments and different value adding elements, then your return, first of all, will be higher. And then the concentration won't be just in the exposure, mainly around the 3 core bases that we've been using in the past. And then maybe another area, all the service providers that we do have, let's say our auditors, our trustees, of course, the trustees that do keep your look after the whole fund, the custodians that do keep your money, these people offer service. And of course, you know, in any economy, you to get the best service, then you need an exchange, a medium of exchange, and that's why we actually spend in those areas. And you notice even when you look at an expenditure of giving assurance that what we are presenting to you, all the profitability, the assets are actually safe. We try to keep the likes of auditing in around our top 4 firms in the country, and also on the global scale. So we, in general, we try to spend on the best services to ensure that we actually give you the best value out there when you compare it to the market. And that's one of our most important key points that we look at as management from day one, to ensure that first, your funds are very safe, and then you don't get left behind when it comes to the digital journey. And of course, also the marketing strategy that will ensure that we actually reach everyone that's available. And maybe another area where we spend money, it's on events of preparations of the AGMs, and of course ensuring that end of the day you don't just hear about the performance, but you get to be part of it like you are right now. So those are the 4 around I think I've mentioned even up to 5 key areas where we do a lot of the expenditure. And why that grew may be to highlight how that ideally tallies to what we are investing. So the growth of 84%. So when you look at the overall fund in the income that we got for 2022, you notice that 2022 we had a growth of almost 100% in the fund. So given that these funds actually, the expenses are attached to the value addition per person or per a unit holder or per person who has invested in the fund. So the moment that fund is actually growing, then the same is expected. Because what we believe is that if I'm spending, let's say, I'll use a basic example. If I'm spending 5 million on 10 clients or on 5 clients, I believe once of course I add another 10 clients, I will need to also open for them individual accounts. I would need to increase the security of those specific funds. And then when it also comes to the people that are actually looking after the funds, all the people who are going out there to get the best alternatives for you to invest, that also grows. So in summary, that's how I can highlight how literally those expenses are growing, that they are moving not directly proportional to the fund, but close to that, because we don't want that, let's say, if we have the 5 million and we have an extra 20 people, then we try to squeeze within the funds that we do have. That means we shall be diluting the value that we're giving you as a client. And end of the day, it will be you losing out in the long run. So we want to ensure that everyone in the fund and everyone we're exposing the fund to actually gets the same treatment as the people who are in the fund and those that are yet to join the fund. So I think I'll leave it at that. Thank you, MC.
Thank you so much, Mr. CFO. I think you know how CFOs talk these days. They speak to answer also questions you are thinking of asking, because efficiency is what CFO Goloba is trying to emphasize. So thank you so much for that. There was also a question which I will just touch on behalf of the operations team, which was talking about the redemption process, the receipting process, because it's also speaking into basically operations, because I think for the earlier customers, I remember they would put in a redemption and within a few hours it is processed, okay? Now, one of the things that we have to be grateful to God is that the business has grown tremendously over the last 3-4 years. And that also comes with a lot of operational challenges in terms of maintaining the efficiency of service delivery. And that's the reason why the official communication has always been that redemptions are received within 2 working days. And so it also sometimes, most times, depends on the volume of transactions. So if the volume of transactions is in thousands of transactions, sometimes some of those transactions have to spill over into the next day. However, the operation team is always working round the clock to make sure that if a client does not get funds on that day, they get the funds the next working day. So a kind request is to also put that time allocation, okay? Meaning that if I'm expecting money probably on a Wednesday, I should probably put in my transaction maybe Monday afternoon. I get money on Tuesday so that I can execute my transaction on Wednesday. But most likely you'll get money that day. But however, it's always good to factor in that those once in a while circumstances where we might need a little bit more time. And also, there was also another person who asked another operation question about, because John really talked a lot about the paperless system that we are planning to go into. So I will take that as answered. But there was also another question around deposits. Why are we always asking clients? And this is actually someone called Prince who asked a question, why do we have to send proof of deposit whenever we make deposits? Now, the reason is simple. You see, the account that you're depositing money in, which is Standard Chartered, is a collection account. And so many clients deposit money in that collection account. Now, in the beginning, when the fund was small, names were unique identifiers. So I could have a name like Mr. Yusuf Katshave, and there was one client in the system called Yusuf Katshave. Unfortunately, there are now 10 Yusuf Katushaves. So gone are the days when a name was a unique identifying factor. Now, we now insist that every client needs to also deposit and also indicate their personal account number, because the personal account number is the unique identifier. So what happens if, and this has happened a lot where clients go to the bank and they try to deposit money, and allow me, Yusuf, to keep using you as an example, and Yusuf Katshave is the person who has deposited money, but the teller behind puts one name, and it's Yusuf. So in our system, we see one name, Yusuf, but we have hundreds of Yusufs. So the reason why operations team requests you to submit the proof of transfer is so that we can be sure whose money this deposit is. But the good news about it is that even if maybe an inquiry is made and we finally identify you as you're the owner of the money, the beauty about it is that your money has been earning interest, and so your account should be credited with that interest as well, so that there is no loss at all. Yes, so now maybe we shall just have another round of questions. There are just a few questions which I can see that were asked here. And then I think this is on the online platform. I have seen someone who's asking, this is Mr. Jude Odele, who's asking, what resources do you have for researching and analyzing funds and markets? And they also want to know how many analysts we employ, what reporting and reviews do you follow? So, Mr. Chairman, you said they had questions that I might have to answer this. Now, the beauty about the Old Mutual Group and the Old Mutual Group is that there is a group of there's a group of analysts, there's a group of portfolio managers, not only locally, but regionally based. We have a team in Kenya, a team in Uganda, because our investment decisions cut across the region. And this involves weekly meetings to understand the strategy. We don't just look at what you call technical analysis, we also look at what we call fundamental analysis, meaning that we don't just look at where Umeme is now or where CIPLA is now. The question is, what is the real intrinsic value basing on the research that the team has? So in short, we don't look at the market only, but we also have an investment philosophy which we follow to ensure that investors are not just making money now, but even in the future economic upturns and downturns, they are still above the water. So that is just something to answer for Mr. Jude. And maybe I will also, there are some few questions here. Madam, oh yes, Olive has something to say from CMA.
Thank you very much, Zach. My role here as a regulator is basically to observe in the interest of investor protection, but I'm going to request that you allow me to take off my regulatory hat. I have a few questions that I would like answered. First of all, I want to commend UAP for its performance. I noticed the money market fund, there was a drop in fund value, but you were able to, the returns actually increased from about 10.9 to 11%. My question though is on the umbrella fund and the balanced fund. So in 2021, the balanced fund did really well, almost offering 13% in return. This year we see a drop. It's offering the same return as the umbrella fund. Just curious why. I have two more questions. In terms of innovation, UAP, for those who do not know, is actually the biggest player in the market in terms of AUM. That automatically feeds into the market share that it holds. UAP is very proud of the fact that it's headed by a CFA, so many CFAs on the management team. So I'm just curious, why is it that the return that you're offering is pretty much the same return that is being offered by the other managers? The margins are very small. By virtue of the fact that you have the biggest AUM, we would expect a higher return as investors. My other question goes to the trustee and the custodian. As an investor, because these ideally should be two separate roles. But in this particular situation, Standard Chartered is both the trustee and the custodian. And I guess also internally as CMA, this is something we would probably have to look into, but that's a discussion for a whole other day. As an investor, what comfort can you give me that these two roles are actually being carried out separately, or that there are actually firewalls in place to ensure that the custody role and the trustee role are very, very separate within Standard Chartered? Thank you.
Thank you very much. I'll just, Rosalind, I think will say something about the difference between the custodian and the trustee, how the roles are differentiated. Rosalind, do you want to go now? As you'll go afterwards, okay. So I think there was a question also around return. I'll also say something brief about that. And we also looked at the balanced fund. Now, for those of you who look at the historical performance of the balanced fund, you realize that there are certain years when it is really up, and then there are certain years when it is down. So in short, the balanced fund also has, you could say, the highest volatility, because there was a year when you could see the return was as low as 6%. And these are what you call effective annual returns, meaning they factor in compounding. Now, when you look at the composition of the balanced fund is actually the fund which has a combination of both safe and risky investments. And by risky, in this case, we're talking about the equities. Okay, so you're looking at both foreign equities and also domestic equities. So for example, when you see that the fund performed so well, most likely there's a part of the asset allocation which was overweight. In the case of, for example, Meme, which really rose up in terms of its share price. So that's what caused the balanced fund to go up in terms of performance. So whenever you look at the performance of the balanced fund, think about it in terms of it being a mirror image of the performance of the equity market. That is very, very important to note. So the question now becomes, who do we recommend to be a client of the balanced fund? And why is it that, for example, the umbrella trust fund is the largest fund, and yet the balanced fund once in a while matches up its performance? It's simply because there are a number of clients are risk averse, meaning that they expect a higher return for the lowest amount of risk. And when you meet a number of clients, many of them say, I want a kind of fund where I'm not looking at a reduction in my principal. So if I've invested 50 million, I don't want to hear stories of how it went down to 49. Even if the interest goes down, I want to be certain that my return is in positive digits. That's the reason why majority of people go for the umbrella, because it's investing mainly in long-term bonds, safe investments. However, for those people whose risk appetite is higher, we recommend the balanced fund, because these are people who are exposed to the performance of the equities. And the truth is the balanced fund's performance is majorly dependent on the performance of the equities. So as a team, in fact, when you look at the return being 6%, you'll be shocked that the market could have generated negative returns, because the investment team is also looking at stock selection. We look at saying, do we invest in value stocks? Do we invest in growth stocks? What is the performance at a portfolio-wide basis in terms of diversification? So we try our best to make sure that anybody who's interested in investing in the stock market, they would rather go for the balanced fund, because you will have that diversification benefit of having assets or equities that are spread across the region. So what we look at is not just appreciation of capital, our capital base, we also look at preservation. And that's very important, because at the end of the day, when the markets are doing well, the balanced fund will produce almost similar returns as the umbrella. But when the markets are doing badly and the balanced fund's at 6%, you'll find that most of the markets were in negative return. So for us, our relationship is more long-term, both in the upswings and the downswings of the market. Yes, so about the return of Old Mutual versus the return of other players. Now, one of the things to appreciate is the fact that Old Mutual is also a registered publicly listed company in other markets. So it means that Old Mutual Group, as a group, we are not based only in Uganda, we are based in other markets. And corporate governance structures are of our utmost priority. In fact, if you ask the investment team, our focus before we talk about return is safety. Safety first. So our internal structures ensure that when you look at the investment model of the team, we don't focus just on which bank will give us the highest return in terms of a fixed deposit. We don't look at we don't just look at returns. We look at also the risk, how risky is investing money in that bank. So when we look at return on a risk-adjusted basis. And that's the reason why even during the pandemic, our returns were really, really, really competitive. So many of our clients who come to us, we have a fiduciary responsibility to them, because being the market leader, we want our clients not just to look at the return, but to be confident that we have the most diversified portfolio. I don't know whether our managing director had something to add, but Mr. Chairman, you said we are here to answer the hard questions. So, yes, please.
Yeah, no, Zach, I really don't have much more to add, because you've really highlighted on the how can I put it, the thought process. But just to go a bit granular, we normally don't clearly disclose what we are going to buy, because some of that is a bit of, how do I put it? Is it copyright or trade secret? But I'll just say some of the things that we did in 2021 for the balance fund. We did exit a good chunk of our equities, especially Kenyan equities, in 2021, and that accounted for the almost 13% return. And for 2022, we were actually more or less underweight in equities, regional equities, apart from local equities. So local equities was mainly Umeme that has accounted for the performance. But like I mentioned just a few minutes ago, we are now ready. We're trying to look at some opportunities in Kenya. We're looking at opportunity anywhere where there is a bit of noise and markets seem to be turbulent. We're trying to peel that onion and see if we can find some value inside there. And because the nature of investment management, you want to know whether you have a good manager next week, next month. You probably know that you had a good manager 3 years from now as a result of the decisions the manager is making right now. So right now it's easy for all of us to be at the same footing, But we will be able to know who has been doing what over the next 3 years. So that's why when we're making our investment decisions, we're not looking at what will make us tick next week, next month, or next quarter. We're looking at what will make us tick over the next 5 years and 10 years, because those are the kind of relationships that we want to cultivate with our investors, and we would expect that is a similar mindset that the investors use when they're investing with us. And regarding the issue of return, again, Zaka has adequately put it in the sense that our focus is different. So our focus is flexibility and liquidity. So we want to create a scenario where when someone wants their money, they won't have a prayer session. When they want their money, the money is available when and as they need it, you get. So we will try to promote safety, we'll try to promote flexibility, and we'll try to promote things to do with turnaround time. While for the longer funds, or the funds where there is a longer term approach, we'll try to promote how do we make the best possible return over the long haul. Yeah.
Thank you. Rosalind, I think there's a question about the segregation of responsibilities between the trustee and custodian, because both are stanchion.
Okay, thank you, Zach, and I believe you're in the capacity now as our unit holder when you asked the question. But at a very high level, let's start with the history, the global standards. Just very briefly, we'll look at globally. Luxembourg as a jurisdiction is actually the biggest or the largest jurisdiction for funds. This is the same model they've adapted, and these are tried and tested models, whereby it's the same provider for your custody, for your trustee, and administration. So administration is now this portion where you're asking about your redemption and subscription. And there are reasons behind it where the market evolved to that point where you have the same provider that is looking after the fund, who is safekeeping it, who is playing the fiduciary role, and also playing the fund services / administration role, which technically is called transfer agency. However, coming back down here, let's also look at the trust deed. What does the trust deed spell out? The role of a custodian is very clearly spelled out. The role of a trustee is also very clearly stated. We sign off on this. We as a custodian and trustee also, again, are you able to demonstrate a clear segregation of duty between what a custodian does and a trustee does? Are you also able to demonstrate that you have clear information walls where there is no conflict between the two areas? One of the ways we adapt these actually that has actually also really worked very well is that we have clear systems that are very separate for the custody services, systems that are also very separate for our trustee services. Custody is safekeeping and servicing of your assets. Basically, that's the custodian's role. They will safekeep, they'll service your assets that we hold. And servicing assets means making sure when the money comes in, I get instruction from the investment manager. It is executed as per their instruction, as it's spelled out. When the money goes out, we ensure that it also comes back in. When there's a coupon due to you, to the fund, it is paid and received and reconciled back, and all those duties. Now, the trustee comes in at a post-compliance role to ensure that the manager has actually done his job and made sure that when they calculate the pricing, the yield that you get on a daily, that it's done correctly, and it comes back, we approve it, that yes, this is correct. We check that actually they are doing their role. Basically, we have to make sure that we keep separate systems, and we assure you that the systems that for custody are separate, very separate from the ones for trustee. The individuals that also handle the custody business are also very separate from the trustee business. And that's a very high level explanation to the unit holders.
Thank you so much. Thank you so much, Rosalind, for that. I think in the interest of time, I think we shall just make a few announcements or statements. There are some people who are posting questions on the chat. The OMIG Uganda team is actually also in the back room answering a number of those questions. There are just only 3 questions here, just very brief and brief questions that I think, John, just a simple question which you can give an answer about. There was someone called Luke Wadua who was saying, why is there a provision for withholding tax on the balance sheet, yet we don't pay withholding tax? I think that's just an observation. And then, yes, there's just a question which comes every AGM. How do I collect my gift if I don't come for the AGM. I think there has been a tradition of giving unit trust holders something, but basically, please make sure you, as I said, we're not promising anything, but please make sure you registered your attendance. I hope you attended the AGM. The IT team is going to confirm that you attended in the event that something good comes in the foreseeable future. So, John, you can answer that question, and then I shall yield the floor to Chairman with a special question, which I'm sure Chairman will answer. Someone said that now that COVID-19 is out of the picture, when will we have the physical AGMs? But I'm sure Chairman will answer that one as he closes the meeting. Yes, John, back to you.
Thanks a lot, Zach. I hope I'm audible. So looking at what's seated as our WHT, yes, it's true the unit trust business and fund is actually exempted, but what happens is that some of our investment options, mostly actually, we normally get this from the banks, but of course from the government securities, actually when your interest comes, we get 100% of it. But we do have scenarios where actually banks do withhold some of that interest, even though we are exempted. So as you will notice, when we are doing the financials, they are cut-off periods, right? So you will notice, I use an example of July. You notice that July ends on 31st of, it ends on 31st. So what will happen is that if we are expecting interest on 31st and receive a net of it less the withholding tax that has, let's say, in error or accidentally been withheld by a bank, then what we shall report will be a net. But to cater for that, to ensure that actually that value addition finally comes to you as a client, we book it as a receivable in our statement of financial position. So that's why you will notice that in our financials, we have a receivable of WHT. That means we do communicate to the banks, and actually that money is remitted to us. Then once it comes through, we go ahead and distribute it back to when to the 100% position that caters for all the interest that would have come through. But those are one-offs. That's why you notice that in specifically 2022, we did not have any bank actually withholding any of that amount, but it's mostly, that's the scenario how it happens, that they do withhold in error, but because of cut-off processes, of course, we report the numbers as they are, but we do book that as a receivable and collect that in a subsequent month and definitely shared to the unit holders as a return. I think that's the best explanation I can give at the moment. Thank you.
Thank you so much, CFO. We yield the floor to our chairman.
Okay, can you hear me? Yeah, thank you very much. I was asked the easy one about holding a fully fledged meeting. And I think it is time we had a reunion of our unit holders. Truth be told, there's nothing like meeting people in persons. So I request management that next year, circumstances willing, if there are no pandemics or any problem, we should have a reunion. We will call it a reunion as an AGM. So over to you, management. Now, there was a question about what? Not receiving your money the same day you ask for it. And I think it's really about how we plan. Sometimes, Zach, you pay the money on the same day, but the bank credits it in the night or the next morning. But we usually do pay on the day that you request for payment. But the lead time in the bank is different. So please kindly schedule your requirements. Don't ask and expect to get it immediately. There is a process. The other one which I would have wanted Simon to talk about, before we move on, in relation to the things we are thinking about, really, because it's important. The dollar unit trust which we are introducing. There was a talk about sovereign debt. The reason why it is called sovereign debt is that you don't expect the country to stop existing. Okay? So Kenya will be there tomorrow, Uganda will be there tomorrow, Ghana will be there tomorrow, Zambia will be there. And that is why we even determine a risk-free rate based on government debt. So sometimes these countries have run into problems and the investors have had to take a haircut. But as far as we are concerned, because we have a balanced mix of investment in our portfolio, those haircuts would really ordinarily not affect, because we have diversified the risk for you. So that is the situation in as far as our planning is concerned. But Simon, you could talk about very briefly the dollar fund and maybe the idea of alternative investments. Thank you.
Thank you. Thank you, Chair. It's true. We've been. I might have to borrow your mic. Let me use that. Let me use. Testing. Perfect. Yeah. So regarding the dollar fund, I think it's been coming. It's been a long time coming. We've had numerous engagements with unit holders in terms of feedback, from the feedback that we've been getting. I think even on the group, on the team's call, I've seen a question around someone asking, can I invest outside of UGX or in another currency? And we've been in the kitchen. We worked with our different partners, but most importantly, we want to give thanks to CMA, who have most recently approved our application to roll out a dollar fund. And before the end of this month, we should be able to see that up and running. And right now, the best we can say is please talk to us, because the opportunity is in the finalization. And we're already beginning to see early shoots of this. And before the end of this month, it will be full-blown. And we think that this solution is very timely, because it can be able to answer some of the questions that investors or unit holders have had around how to diversify their investment outside of the Uganda shilling. But also, we're trying to answer a question to our colleagues in the diaspora, who for the most part have been going, and maybe for one reason or another, either frustrated by relatives when they send money back home, and by the time they come back to celebrate their years of hard work, there is probably nothing to show for. So we want to start answering those questions. And we think that the dollar investment solution, or the dollar unit trust fund, will be able to solve that question. The other question that we're asking ourselves heavily, that we want to solve or want to find an answer to, is regarding the investment space in this country. So there's been traditional investments that we've been investing. And if you look through the annual report or the abridged report, you will see among the typical investments you're seeing your treasury bills, treasury bonds, fixed deposits, and from time to time we've been adventurous on the stock exchange. However, we are beginning to see that those kind of investments, or that investment space that we've been looking at, it has been just solving one part of the equation, which is, can we get a return? But it's not solving the other part of the equation, which is, how relevant are we as investment managers to the economy? And so what we are beginning to ask ourselves is, how are we going to be relevant to the economy or to the country as a whole? And that is also to answer the question of, okay, yeah, now you have a tax, a tax advantage. What are you doing about it? Are you just going to gather savings and give everything to the government or give everything to the bank in fixed deposits. So the question we're asking is, we want to be able to solve or answer how are we being relevant to the real economy, and that is where we are talking about alternative investments. So we are kickstarting our journey to alternative investments. So we're going to be structuring real solutions that as unit holders and as general investors out there, we can be able to come in and solve. For example, some of the things that clearly come off head. We've had a typical situation where when people get sick, for those who are affluent, they are quick to get solutions abroad. And it's a bit costly because you find that someone has to get an air ticket, get into accommodation and all that they're trying to do is get decent healthcare. And so what we want to do is try to see how can, as investment managers, how can we provide solutions in healthcare, partnering with different providers of healthcare within that value chain to see at which point can we invest to create that multiplier effect so that we start seeing fewer Ugandans going abroad for treatment, more Ugandans staying here because we've been able to answer some questions around healthcare. Same thing with currency. We've seen that a number of African countries, the biggest challenge is currency. So we want to ask ourselves, that problem of currency, we believe it's an investment solution, or it's an investment problem that is a problem that can be answered by an investment. And then also to our colleagues in the diaspora, we also want to answer that question and want to use the alternative investment or our alternative investment suite to answer those questions. So if you have any question or any challenge that you're seeing in society, please send it to us. We'll be able to solve it through investments. And that's why we are heavily investing. Part of the investment that John talked about is also in enhancing our investment universe or our investment horizon where we are investing. And so that's why you're going to start hearing a lot of alternative investments, because we're going to start channeling capital to solve some of those problems. And then as unit holders, you'll have every reason to think that, no, I'm not with Old Mutual for the return they are giving me or the flexibility they are giving me. I'm with Old Mutual because I'm able to see the impact that I'm doing to this country, or I'm able to see the impact that my investment is doing in this country. Chair, I hope I've highlighted that adequately.
Thank you. That's why I asked you, because you say it better than me. And I guess we have come to the end of the question and answer session. I have not received any notice of any other business to be transacted. If there was to be any other business, I would have been notified at least 7 days before the meeting, which has not been done. So I would like to adjourn this meeting, and I'd like to adjourn this meeting by inviting you to a late breakfast, or should we call it a brunch, and also thank you for attending this annual general meeting. For those who are online, thank you for the questions. Excuse me. And thank you for listening in. The meeting is adjourned until next year when we have our reunion. Thank you very much.